Imagine you could go back to the first day you discovered trading, before the indicators, before the strategies, before the YouTube videos, before smart money concept, ICT, liquidity, order blocks, fair value gaps, trend lines, and everything else that eventually gets thrown at you. Imagine you could start again with one goal: get good at trading as fast as humanly possible. What would you do differently? Most beginners think the answer is simple. Find the best strategy. Learn as many concepts as possible. Watch the best traders. Find the perfect entry. Take more trades. And somehow become profitable as quickly as possible. But that's not how skill works. And it's certainly not how trading works. Because the fastest way to become good at trading is not to consume more information. It's to shorten the distance between practice, mistakes, feedback, and improvement. The traders who improve fastest aren't necessarily the smartest people in the room. They aren't the people with the most complicated charts, and they aren't the people who know the most trading terminology. They're usually the people who can do one thing extremely well. They can focus on one process long enough to get enough feedback to actually improve. And that's what we're going to talk about today. Because if you're serious about becoming a better trader, there's a massive difference between learning about trading and learning how to trade. And understanding that difference can save you years. Think about the average beginner. They discover trading. They're excited. They start watching YouTube videos. One video teaches support and resistance. Another teaches liquidity. Another teaches smart money concept. Then ICT. Then order blocks. Then fair value gaps. Then market structure. Then trend lines. Then indicators. Then psychology. Then another strategy. Then another mentor. Then another course. And after 6 months, they have consumed hundreds of hours of trading content. But put them in front of a live chart and ask, what exactly are you waiting for? They don't know. This is the information trap. They have learned a lot about trading, but they haven't practiced the skill of making decisions under uncertainty. And that's a huge distinction. You can know what an order block is and still be a terrible trader. You can understand liquidity and still lose money. You can memorize dozens of candlestick patterns and still overtrade. You can watch every trading psychology video on YouTube and still revenge trade after your next loss, because information isn't the same thing as competence. Knowing what to do is one thing. Being able to do it consistently, under pressure, with real money involved, is something completely different. And if you want to get good quickly, you have to stop confusing the two. Check the link in bio and in description to get my recommended trading books. The first thing you need to do is reduce the game. Trading is already difficult. Don't make it harder by trying to master everything. Choose one market. Maybe it's Forex, maybe it's futures, maybe it's stocks, maybe it's crypto. It doesn't matter for this lesson. Choose one. Then choose the specific environment you want to study. Maybe one session. Maybe one time frame combination. Maybe one style. The goal isn't to find the perfect market. The goal is to create repetition. Because repetition is what allows your brain to start recognizing patterns. Think about someone learning a sport. A basketball player doesn't practice every sport simultaneously. A boxer doesn't learn 10 fighting styles in the first week. A musician doesn't learn 5 instruments before learning one song. They narrow their focus, then they repeat, then they receive feedback, then they correct, then they repeat again. Trading should be approached the same way. And this brings us to one of the biggest reasons traders take so long to improve. They keep resetting the learning process. They lose 3 trades. They change strategy. They watch a new video. They discover a new concept. They change their rules. They test something else. Then they lose again. And the cycle continues. SMC, ICT, trend lines, indicators, price action, supply and demand. Then back to SMC. This feels like progress because you're constantly learning something new. But you're actually destroying one of the most valuable things a trader can have. Consistent repetition. Every time you completely change your strategy, you become a beginner again. You have new rules, new entry conditions, new invalidation points, new expectations, new statistics, and new execution problems. You never stay with one framework long enough to understand its strengths and weaknesses. So if you want to improve faster, here's a difficult rule. Stop searching for the next strategy. Pick one reasonable approach and stay with it long enough to collect meaningful evidence. Not forever, not blindly, but long enough to actually know what you're dealing with. Now here's where things get interesting. Once you've chosen your approach, you need to stop thinking like a trader who is trying to make money and start thinking like a student who is trying to collect information. This mindset changes everything. Imagine you're learning a new trading setup. Your goal isn't, I need this trade to win. Your goal is, I need to understand what happens when this setup appears. That's different. You begin studying historical charts. You find the setup. You mark the entry. You define the stop. You define the target. You record the outcome. Then you find another, and another, and another. After 20 examples, you have a small amount of information. After 100 examples, you have more. After several hundred properly recorded examples, you're beginning to see something. You're no longer relying completely on someone's opinion. You're building your own evidence, and evidence creates confidence. Not motivation, not hype, evidence. This is why backtesting is so powerful. Because most beginners want confidence before they have earned it. They want to feel certain that their strategy works. But trading doesn't give you certainty. What you can build is statistical confidence. You can learn, how often does this setup work? What does a losing trade look like? What does a winning trade look like? How often do losses occur consecutively? Which market conditions produce the best results? Which conditions should I avoid? What happens when I enter early? What happens when I wait for confirmation? What happens when I change my risk? Now you're learning. And here's something important. Don't just backtest your winners. Study your losers. Actually study them carefully. Because your losing trades may teach you more than your winning trades. A losing trade can tell you, you entered too early. The setup wasn't valid. The market was ranging. You traded outside your preferred session. You ignored your own rule. Or maybe the setup was perfectly valid and simply lost. That distinction is extremely important, because if you don't understand it, you'll eventually make one of two mistakes. You'll abandon a good strategy because of normal losses, or you'll defend a bad strategy because you refuse to look at the evidence. And this leads to one of the most important psychological skills in trading, separating a bad trade from a losing trade. These are not the same thing. Imagine you follow every rule. You wait for your setup. You enter exactly where you planned. Your risk is controlled. Your stop is placed correctly. And then the trade loses. That doesn't automatically mean you made a mistake. You experienced a losing trade. Now imagine another situation. You see price moving quickly. You get excited. You enter without confirmation. You move your stop. You increase your position size. And somehow, the trade wins. Did you make a good trade? No. You made a bad decision that happened to produce a profitable outcome. And if you reward that behavior, eventually it will hurt you. This is why you should judge yourself based on process, not individual outcomes. So let's talk about the feedback loop. If you want to improve as fast as possible, your trading process should look something like this. Study, practice, execute, record, review, correct, repeat. That's it. That loop is where improvement happens. But most traders destroy the loop. They study, they trade, they lose, they get emotional, they change strategy, and the feedback disappears. Instead, imagine every trade becoming a piece of data. You take a trade, you record why you entered, you record what you expected, you record what happened, you record how you felt, then at the end of the week, you review. Maybe you discover that 40% of your trades were taken outside your rules. That's not a strategy problem. That's an execution problem. So you work on execution. Then you discover that your biggest losses happen after your first losing trade. That's a psychology problem. So you create a rule. After 2 consecutive losses, stop trading for the day. Now you're improving. Not because you found another strategy, but because you found a weakness and corrected it. That's deliberate practice. And this is where your trading journal becomes extremely important. A journal shouldn't just be a list of wins and losses. It should become a mirror. Ask yourself, why did I take this trade? Was the setup actually there? Was I bored? Was I afraid of missing the move? Was I trying to make back a previous loss? Did I move my stop? Did I take profit because the setup invalidated or because I became scared? Did I follow my plan? What would I do differently next time? The more honest you are in your journal, the faster you can improve, because you can't fix what you're unwilling to admit. Now, let's talk about something uncomfortable. You probably need less screen time than you think, but better screen time. Sitting in front of charts for 10 hours doesn't automatically make you better. You can stare at a chart for 10 hours and learn nothing. Or you can spend 2 focused hours studying one specific setup and learn more. The difference is intentionality. Don't just watch the market. Study the market. Before the session, define what you're looking for. During the session, observe. After the session, review. And when you're reviewing historical data, don't simply scroll through charts looking for obvious winners. Challenge yourself. Hide the future candles. Ask, what would I do here? Then move forward. See what happened. Then ask why. This creates active learning. You're not just watching. You're making decisions and receiving immediate feedback. And there's another skill you need if you want to improve quickly. Learn to do nothing. This sounds strange, but doing nothing is one of the hardest skills in trading. A beginner sees a chart moving and feels like they should participate. A candle moves up. They want to buy. A candle moves down. They want to sell. The market becomes boring. They take a trade. Why? Because they're sitting there thinking, I'm a trader. I need to trade. No, you don't get paid for being active. You get paid for executing your edge. There will be days where the best decision is to take 0 trades. That's not wasted time. That's discipline. And the ability to sit through uncertainty without forcing an opportunity is a huge psychological advantage. Another thing that slows traders down is over-risking. You cannot learn effectively when every trade feels like a financial emergency. If one loss makes you angry, if one loss makes you question your future, if one loss makes you desperate to win the next trade, then you're probably risking too much. When your risk is controlled, your brain can observe. You can say, that trade lost. Let's see why. Instead of, I just lost money. I need to make it back. That's a completely different psychological state. The goal isn't to eliminate losing trades. That's impossible. The goal is to make losses emotionally survivable. And here's something else that will accelerate your development. Stop measuring yourself only by money. Money is important, obviously. But during the learning process, profit and loss can be a terrible teacher if that's the only thing you're measuring. Instead, track things like, how many valid setups did I recognize? How often did I follow my rules? How many impulsive trades did I take? How many times did I move my stop? How often did I experience FOMO? How many trades did I take outside my plan? If those numbers improve, you're improving. Maybe your account isn't growing quickly yet. That's okay. You are building the behavior that can eventually support consistency. Now let's address one of the biggest lies in trading. I need to find the perfect strategy before I can become successful. You don't. There is no perfect strategy. Every strategy has losing trades. Every strategy has periods where it performs better. Every strategy has periods where it performs worse. Your job isn't to find something that never loses. Your job is to find a process you can understand, test, and execute consistently. And then you need to understand its limitations. That is maturity. A beginner asks, what's the win rate? A developing trader asks, what's the expectancy? A more experienced trader asks, under what conditions does this strategy work? And under what conditions does it fail? That's a completely different level of thinking. And finally, you need patience. I know. That's probably the answer you didn't want to hear. You asked, how can I get good as fast as humanly possible? And the answer is, by refusing to waste time, not by rushing. Those are different things. Rushing means trying to skip stages. Not wasting time means focusing intensely on the stages that matter. Don't spend 6 months switching strategies. Don't spend another 6 months watching videos without testing anything. Don't spend years risking too much because you want to become profitable quickly. Don't spend your entire journey trying to impress other traders. Instead, choose, study, backtest, practice, execute, journal, review, correct, repeat, and repeat again. Imagine 2 traders start today. Trader A watches 5 hours of trading content every day. They learn new concepts constantly. Every week they have a new strategy. Their chart gets more complicated. Their confidence changes every time they win or lose. Trader B chooses one setup. They backtest it. They study hundreds of examples. They trade it repeatedly. They journal every mistake. Every weekend they review their data. They identify one weakness. Then they work on that weakness. 3 months later, Trader A knows more terminology. Trader B understands their setup. 6 months later, Trader A is still searching. Trader B has hundreds of examples behind their decisions. A year later, Trader A says, "Trading doesn't work." Trader B says, "I know exactly what I'm looking for. I know when my setup fails, and I know how I behave when I lose." That's the difference. Not intelligence, not luck. Focused repetition. So if you want to get good at trading as fast as humanly possible, remember this. Don't try to learn everything. Learn one thing deeply. Don't switch strategies every time you lose. Collect enough evidence to understand what you're doing. Don't chase every move. Wait for your setup. Don't judge yourself by your last trade. Judge yourself by your process. Don't risk so much that you become emotional. Give yourself room to learn. Don't spend all your time consuming information. Spend more time practicing. And don't hide from your mistakes. Study them. Because your mistakes are not interruptions to the learning process. They are the learning process. The fastest growing trader isn't the person who avoids mistakes. It's the person who can identify them quickly, understand them honestly, correct them, and avoid repeating them. That's how you compress the learning curve. So tomorrow, when you open your charts, don't ask, "How much money can I make today?" Ask, "What am I here to practice?" Maybe today you're practicing patience. Maybe you're practicing waiting for confirmation. Maybe you're practicing not moving your stop. Maybe you're practicing taking only your A-plus setups. Maybe you're practicing accepting a loss without revenge trading. That's how you build a trader. One decision at a time, one trade at a time. One mistake at a time. One correction at a time. Until eventually something changes. The chart doesn't suddenly become predictable. The market doesn't suddenly become easy. You simply become better at dealing with uncertainty. And that's what becoming good at trading really means. Not predicting every move, not winning every trade, not finding some secret strategy that nobody else knows, but becoming the kind of trader who can repeatedly execute a tested process, manage risk, control their emotions, learn from their mistakes, and stay disciplined when the market doesn't give them what they want. That's the real shortcut. There is no shortcut around the work, but there is a shortcut around wasted work. Stop searching, start studying, stop switching, start repeating, stop chasing outcomes, start building skill. And if you do that consistently, you may discover something important. Getting good at trading isn't about learning faster. It's about learning better. And once you understand that, your entire approach to trading changes. Master the process, master yourself, and let the results take care of themselves.